welcome to another episode of Thinking Like a Bank, where we show you how to think like a bank by applying the same strategies and principles that banks use to help you find more financial freedom in your life. I'm your host, Sari Ibrahim. Today, I'm interviewing Joe Camberato. He's a CEO and founder of National Business Capital, the leading fintech marketplace helping entrepreneurs access competitive financing fast through an easy-to-use online platform and experienced team. Joe knows entrepreneurs because he is an entrepreneur. With a strong vision, determination, and passionate leadership, Joe grew his firm from a small operation in his spare bedroom to one of the top workplaces on Long Island, all without $1 of private equity. Hey, Joe, welcome to our podcast.
Thanks for having me, Sari.
Yeah, I'm looking forward to interview you. I think what you're doing aligns really well with our podcast, Thinking Like a Bank, since you're in the lending business. But before we get into that, I want to know more about you and your journey.
Yeah, sure. Absolutely. Well, my name is Joe Camberato. I founded my company, National Business Capital, back in '07, right before the worst financial crash ever. So it was an interesting time to start that business. I saw how challenging it was for business owners to access capital. It didn't make any sense to me. There wasn't really any company out there that was, would really help navigate customers through to the right business lender. And I found that there was this whole world of non-bank, private lenders. Private credit has become so popular, especially recently with all that's going on. But back in '05, '06, '07, a lot of these private lenders, you get turned down from a bank. I was watching business owners shop around from bank to bank, get frustrated. They were refinancing their homes, using home equity lines of credit to fuel their companies. I came from the mortgage world, and a lot of my customers that were small business owners kept asking me, "Hey, Joe, can you help me with a business loan?" I'd help them with their personal mortgage,
Mhm.
and I said, "Well, I don't do that. I do, you know, uh, home lending and I was very interested in like the commercial side of things, commercial lending. So I started to just shop like a customer around um, to get them a business loan. And then I found out how challenging it was. And I had my first deal. One of the banks we worked with, was a great business. They, got turned down, and it was, a restaurant catering hall. The bank said, "Hey, we just don't like restaurants. We'll never lend to them." And I said, "Well, can you point me in the right direction?" They sent me this non-bank lender, and I was ultimately able to get the deal done. And I watched this business owner grow and scale their business, and I was completely like fascinated. And I was like, "Wow, like if this client like didn't find this unique lender that no one even would know about, like would have they been able to do it?" And I was really hooked. And so in '07, I, incorporated, and I set off to really bring all these lenders
Mhm.
together and streamline the process, make it easy. And, just kind of fast forward, I did exactly that. I started my company out of my spare bedroom, 2007. Um, I fought my way through the recession, got out of my spare bedroom, started hiring people, and slowly and steadily, started streamlining, systems, processes, utilizing technology to make things easier, um, unifying an application, and then learning all the different lenders out there. So, now we have over 75 to 100 lenders or so on our platform.
Mhm.
We process thousands of applications per month. We fund hundreds of applications per month, and we've funded over $2.5 billion in financing for small to medium sized companies, all across the U.S. and really just save them time, aggravation, and frustration, and get
Mhm.
them synced up with the right lender so they can you know get the money they need to grow, and more importantly, get back to doing what they do best, growing their business.
Yeah, definitely. You're right. Like right now, if you Google like loans or business loan broker, or some sort of like loan broker, you'll get nothing but like mortgages. Like you'll get mortgage. Like I think that's typically what people think about when like I want to go out and get a loan. A lot of times it's a mortgage or it has to do with residential properties. But it's very difficult to find business lending specifically, and specifically in the sense of being a broker, right? Because there's a difference between working for one lender or one bank and then being able to shop around, like in your case, between 75 to 100 different lenders.
Yeah, that's what really makes us really unique, because we do everything from SBA loans to term loans, to lines of credit, to equipment financing, to asset-based lending, to factoring, inventory. So, when we work with companies that typically do, a million to 100 million in revenue,
Mhm.
and you know, when someone comes to us, like there's not a lender that's a one size fits all.
Yeah.
There's all these type of lending products, and there's and all these businesses that have different needs. Like we do a lot with contractors in construction, manufacturing, technology, e-commerce, restaurants. All of those different industries have different needs. But you can take two contractors. One may need to buy equipment, and one may need money to fuel cash flow gaps. From the receivables getting slow paid or something like that. So, that one contractor may need a line of credit. The other contractor may think he needs a line of credit, but actually you can use an equipment lender to
Mhm.
finance equipment over a long period of time, low interest rates, 5 year single digit rates.
Mhm.
And we see a lot of times people come to us and like, yeah, no, I got to proof this line of credit. I was going to buy a piece of equipment. We're like, no, like you can actually buy the piece of equipment with an equipment lender and we'll get you a line of credit. And then
Mhm.
they're like completely blown away. So, but most entrepreneurs are great at what they do, whatever their business is. They don't get financing. And,
Yeah.
to be quite frank, like we do this every day and things are constantly changing. Lenders are changing, guidelines are changing. We work with 100 lenders. Like this month, this lender's got the best rates, best
Yeah.
terms for this industry. Next month, they're the worst. So,
Yeah.
like, how would you navigate through that as like, individually as an owner? It's just way too complicated
Yeah.
and too time consuming, so.
Yeah, definitely. It is something like the number one reason why businesses go out of business is because of lack of capital, lack of funding. Right.
I think it winds up being a number of reasons that kind of all snowball together.
Yeah.
But lack of capital is definitely a big reason. I think timing is also another big reason. And then also, just the business owner ability to, work on the business versus
Mhm.
being stuck in it and not really be able to grow it. And a lot of people jump into a business without really, um, you know, you don't really have like the challenges with owning a business is you don't know anything about owning a business until you own a business. You,
Yeah.
you know
Yeah.
what I mean?
Yeah.
It's different like if you grew up in a family business and
Mhm.
then take it over, but that's different.
Yeah.
But if you went from not owning a business or growing up in a family business to opening it, there's a huge learning curve. Even if you went to the best business school in the
Yeah.
world, now you're talking to manage people, process, systems. It's a lot.
Yeah.
I could tell you one thing. You watch all the stuff in social media today, YouTube, and they make entrepreneurship look so glamorous. It is the least thing that's glamorous. Like there's a lot of other glamorous things that you could go and do.
Yeah, yeah. In many cases, entrepreneurship doesn't even make sense until you're like 5 years in. Before that, you're better off getting a
At
job.
least. Yeah.
Yeah, yeah,
It took really like 7 years for everything to come together in my
yeah,
business. At year 5 and 6, I wasn't sure if it was worth it.
yeah.
So like don't expect to make a lot of money in the beginning. Don't expect to have any time.
Mhm.
You got to, eat, breathe, and sleep your business when you get it started. And I think that's why a lot of people fail is
Yeah,
they don't realize like, oh, I'm going to be my own boss. Like, that's great. Yeah, you are, but that doesn't mean that you're going to have like, it's going to be all fun. And if you're looking at, someone that's been doing it for 10 or 20 years, you're like, oh, I want to be that guy.
yeah,
Well, I'm not saying you can't be like, but get ready to take a major step back in your life in order to be successful. You're gonna have to sacrifice 5 to 10 years to get to those. It's like oh, I love baseball and like I want to be that major league player. That's
yeah,
great, but like get ready to work your ass off, like
yeah, yeah,
just like Michael Jordan did, right?
yeah, yeah, definitely, yeah. And going back to the whole, you mentioned a couple of things. You mentioned this interesting thing was non-bank private lending. So what does that mean exactly? What's the difference between what you guys do versus the traditional banking approach to financing?
Yeah, so we work with some lenders that are backed by banks, especially whether it's SBA or equipment. But then, you have this whole world. A lot of people just don't understand this. banks want to do large transactions, 10, 20, 50 million, 100 million plus. So they want to work with very big companies and be very well protected. Banks like to lend umbrellas when the sun's shining.
Yeah.
So in a market like we're in, banks have really tightened up. And for the typical small to medium sized company that's looking for, 100, 250,000 to $10 million, which is really a big area that we focus in, 150, 250,000 and funding to 10 million.
Yeah.
We've done deals higher than that. But, you know, a lot of, banks don't want to do a $500,000 deal, million, 2 million, even 5 million is getting small for them. It's not where their focus is. And banks want collateral, right?
Yeah.
So they want real estate, which is the most obvious. Not every business owns real estate that their business is in, or a lot of real estate. They want collateral. Can also be B2B receivables. It can be inventory. It can be heavy machinery. But think about all the businesses out there that don't hold inventory, that don't have really valuable machinery, that maybe aren't B2B. They're, B2C, to consumers. So a lot of times most businesses don't have the assets or the collateral coverage that banks will want. And then that opens up this whole world of non-bank lending. And then again, even if you've got that collateral coverage, if it's $1 million, like maybe a bank just not interested in it, or maybe the collateral coverage is not perfect for them. So there's non-bank lenders that will utilize that collateral, and they don't have the same restrictions as banks. Also, right now, with all the regulation with banks, banks have, every time a bank lends to any type of loan, there's a ratio of loans that they do versus cash they have to have in the bank. So the more loans they do, the more cash they need to have. And right now, for a lot of the banks, especially the smaller ones, a lot of their cash has gone to the big banks. So banks are very selective, because if they do a lot of lending, then they have to go out and get more deposits into their bank. So they're super selective on high quality, type of deals. And then you go to the non-bank world that doesn't have those restrictions. They can take on more risk. They're more open-minded. If you don't have the collateral, there's lenders that just focus on cash flow. There's lenders that just finance equipment. They don't care about checkings and, deposits and all that stuff. So all these things, a lot of people just don't understand. But, it's probably why you've been having a challenge in a bank. And just because you go to a non-bank lender doesn't mean you have bad credit. Most of the companies we work with have excellent credit. They're very profitable. They've got great opportunities to go and tackle, and we help them with that.
Got it. That makes a lot of sense. Because I think that some business owners may have tried to get financing, and they go to their local bank that they always do business with, and they get turned down, and then they assume that their idea or their concept or their business is not worth getting financing for. But really, they haven't shopped around properly. They haven't met like somebody who owns a company like yours, who could shop around between 75 to 100 different lenders. You mentioned the different types of loans, like SBA, asset-backed, factoring. What are some of your most common types of loans for small businesses? And I mean small businesses, like let's just say around $1 million in annual revenue and probably like 20 employees.
Yeah. We work with a lot of those companies. Typically for those companies, we're doing like lines of credit, like a credit line or a term loan product, a revenue-based product, or equipment financing product. And I was just talking to an entrepreneur the other day, contractor, really great guy, was on my show, Fund Tank. And he bought $600,000 of equipment in cash. And I was like, wow, why'd you do that? You could have kept that cash. We could have financed the equipment over 5 years at low interest rates.
Yeah.
I was like, oh, I didn't know you could do that. And he's having cash flow challenges right now. And I'm like, you could have used that cash to grow and scale your business, and you could still depreciate the equipment and get the tax benefits.
Yeah.
No one ever explained this to him, so.
Yeah. That's definitely big reasons why a lot of business owners borrow. It's not just because they need to buy stuff, but also because of the tax benefits. They could buy equipment, they could buy real estate, they could buy certain things
that are depreciable that could mitigate their tax liability for that year. So that,
100%.
yeah,
Most overlooked thing ever. Like, so you can go finance 100,000 in equipment.
yeah,
You use other people's money, a lender's
yeah,
money, right?
yeah,
You finance over 5 years, great long term, really easy to pay that back. Now you've kept that cash in your business, but
yeah,
then you can also depreciate that equipment, which offsets and reduces your tax liability. So now you've got 100 grand that you can
yeah,
go put in your pocket.
yeah,
You can go invest into something else out of your business, or you can double down in your business and reinvest it.
yeah.
No brainer.
Yeah, and you mentioned something also too before we recorded, diversification, right? Like if you have your one business and you keep reinvesting your profits back into your business, I get it. As a business owner, you have a lot of pride in your business, but the problem is that you're increasing your concentration risk, right? If all your eggs are in one basket, and then like something like COVID happens or something else happens, it can be problematic. So instead, it's advisable, right? Especially from a financial planning perspective, to take from your profits and then diversify, invest in other businesses, invest in other places, probably places that are not even correlated with your type of business. So that way, if your business is affected, then you have other types of you're invested in other types of industries. They're not going to be impacted as your industry.
100%. I mean, I'm a big fan of Ray Dalio. Like he
Yeah,
talks about having like 15, different uncorrelated investments, and then it reduces your risks. I forget the number, but it's by
yeah,
a lot,
yeah,
by like a ridiculous number. If you own a business, you think you're in control, but as we all just experienced in COVID and other downturns, you're not in control, right?
yeah,
So if you own a business, it's just like owning a stock. Would you put all of your money in any one stock? And
yeah,
and the answer for me is absolutely not. You may be different. I don't know. But
yeah,
I'm very big with listen, in the beginning, you got to reinvest back in your business and
yeah,
be all in. I get that. I did that myself. Like,
yeah,
so I'm not like, sitting here like, oh, like it's
yeah,
so easy. Like, no, you got to double down. You got to
yeah,
reinvest back in. You suck when you don't make money. You're growing this thing. You've got opportunity using every dollar. I get it. But once you start, things start going well and you start making money, slowly but surely, you need to, you know, put money into, boring financial planning stuff, put money
yeah,
into a 401k. Maybe it's real estate. Maybe it's another business that's different than yours. Like you have to start, building that diversification because there's always going to be things that will happen that are outside of your control
yeah,
in good economies and bad economies. And as we head into COVID, like things were great, then all of a sudden they weren't. If I wasn't diversified, it would have been really, it would have been a lot more difficult to get through and to make it happen.
mhm,
Everything turned into free money, business lending paused, and you had to
yeah,
really, yeah, thank God I was prepared for that. Um, I think living through 08, 09 and having the carpet pulled out from under me,
yeah,
I learned a lot of lessons there, and I said never again.
yeah, yeah,
But it becomes like another type of job, to focus on diversification and investing. You really have to put the work in to do it.
yeah,
You got to take it. You got to take it serious and start small. Like it doesn't. A lot of people think, oh, when I make money, I'll invest money. But
yeah,
like,
yeah,
in start in very boring things, slow and steady,
yeah.
and over time it builds. And time goes fast, and time's on your side when you're investing.
Yeah, definitely. Yeah, I like how you said that. A lot of people think I see this too as a financial planner, where clients are like, not even clients, more so like friends and family. They'll be like, "I'm gonna wait until I get really wealthy to start investing."
Yeah, that's not how people got wealthy.
Yeah,
No one gets wealthy and then invests. Like,
yeah, yeah, yeah,
it's they got wealthy because they were smart with their money and they invested every dollar they possibly can into other, income producing thing and assets.
yep,
And the reality is most people, are, consumers and not
yeah,
investors. And, people will buy all these things, products, like have every Apple gadget, and they don't own Apple.
yeah,
That's and and
yeah,
and what makes me laugh about that is when you really think about it, if you just put it in perspective, like it what an how un like what a like a gift, like how it's like a privilege that I'm not Steve Jobs, right?
yeah,
I'm not related to Steve Jobs, but I'm able to go publicly go buy like a share of Apple or shares of Apple or whatever. Like
yeah.
that's unbelievable that we're allowed to do that. So it's interesting when people consume all these things but aren't owners of those companies. It's wild when you really
Yeah.
think about it.
Yeah, definitely for sure. Well, Joe, it was awesome having you on this podcast. It was really nice talking to you. How can the listeners connect with you and learn more about you and your company?
Absolutely. You could check out my YouTube channel or on LinkedIn. You go to youtube.com or linkedin.com/grow by Joe. On there, I share, I've got, hundreds of videos on there of things that I've done to help grow and scale my business. I talk about lending, financing, just a lot of cool free stuff that I put out to help entrepreneurs grow and scale. And you can also check out my show Fun Tank on there as well too, where entrepreneurs pitch their business, which is really has been a lot of fun. And you can go check out my company. You can go right to
Mhm.
nationalbusinesscapital.com.
God, I'll be sure to add in those links below, and I'm looking forward to having you back on the podcast.
Awesome. Thanks for having me. I appreciate everything you're doing.
Thank you.
To learn more about what we do and how we can help you grow more wealth, please visit www.finassetprotection.com. That's FIN assetprotection.com. The topics presented in this podcast are for general information only and not for the purposes of providing legal, accounting, or investment advice. On such matters, please consult a professional who knows your specific situation.